Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Tuesday. Hopefully everybody's having a GGD, a great green day in the market. You know, I always wish the best for my viewers and subscribers. Guys, speaking of subscribers, if you haven't gone down and hit that button yet, go ahead and do that. I have been seeing great growth on the channel, and it's really motivating to see those numbers go up. So it's always awesome to see it because it motivates me and helps keep me, focused and hyped up to make videos. So it really does help. So today we're going to go over the overall portfolio performance. We're going to go over the individual stocks and how they're performing, as well as the dividends that we are going to be paid, and the plan for those dividends, and then of course my watch list as well. So let's jump right in. First off, for today, we are up over $100, or about up 0.25%. For the week, we are down $593.80, down about 1.2%. The 1 month mark, we're down about $670, down 1.34%. The 3 month mark, we are down $539, or down right about 1.1%. Year to date, we are down $1,400, or down 2.83%. For the 1 year mark, we are down $3,464.46, or down 6.5%. And then all time, we are up $13,743.77, up 38.60% all time. Gotta love that. Buying power is $1.94, which that will be going up as we go through the portfolio because we have some dividends coming in. First off, we're going to take a look at realty income, sitting pretty at 6106. At closing, we have 143 shares, $8,700 worth of market value. Average cost is $67.10. About 17.7% of the portfolio is in realty income. Today, we are up $50, up 0.6%. Total, we are down $863, down 9%. Not worried about it. This is a great buying opportunity, and it's honestly one of the places that I'm looking to put a lot more money. I love realty income. Next, we've got Coca-Cola, closed at 61.20. So these were actually pretty close on closing, realty income and Coca-Cola. But we have 10 shares, $614.20 of market value. Average cost is $60.84. 1.24% of the portfolio is in Coca-Cola. Today we are up 70 cents. Total, we're up $5.76, so we're up nearly 1%, with a dividend from KO coming in on April 3rd of $4.60. 46 cents a share times 10 equals out to that dividend. Next, we've got Altria, and this is the big payer for this set of months. We've got 315 shares, $14,000 worth of market value. Average cost is $47.34, 28.46, or almost 28.5% of the capital in this portfolio has been allocated to Altria stock. Right now, for today, we are up $91. Total, we are down around $870, down almost 6%. But we do have a dividend coming in from MO on April 28th of $296.10. That will be allocated to the best deal in the portfolio, and we will get to that soon. Next, we've got Apple. Closing price of $157.70. We only have one share, so that is our market price, is that $157.70. Our average cost is $32.66. 0.32% of the portfolio is in Apple. Today we are down to 58 cents, but total return, we are up $25, or 18.88%, so almost a 19% return on our one share of Apple. Trust me, guys, this is going to be one of the biggest positions in the entire portfolio. I just need a little bit of time, and I need that stock to come back down. So I bought it at a great price, just have to wait for it to come down. Then we've got AbbVie, which is going to be in a similar vein, same story as Apple. 95 shares, around $15,000 worth of market value. Average cost is $95.19. 30.38% of the portfolio is in AbbVie. Today we're up $24 and change. Total, we're up nearly $6,000, or a 65% plus return on AbbVie. Gotta love this. Wish I could buy more, but I do not want to bump up my average cost that much to buy another share. So this is going to be one of those that I keep that money in there, I let it compound, I use the dividends to buy something else. Then this is the stock right now that is tumbling further and further down, which I love. So here's the thing. My original thesis on T. Rowe Price was I had about a $30 to $40 upside, and it had grown the dividend for, I think, 36 years consecutively. I've looked at the cash flows. I've looked at the no debt. So the balance sheet and the income statement are phenomenal. Like, I couldn't ask for a better run company. They have great dividend growth. They've done special dividends. They've also bought back shares. So they do everything right for a dividend investor. So this is one of those that I want to buy and hold. But unlike AbbVie and Apple, this one is down huge right now. So 100 shares is exactly where I want to get Coca-Cola. But I have $10,000 in this stock, almost 11. Our average cost is $121.68. Around 22% of the portfolio is in T. Rowe Price. Today we're down $44. Total we're down $13.55, down 11%, with a dividend coming in of $122 on March 30th. So guys, this is the thing. I'm going to take that 122 that I'm going to be getting from T. Rowe Price and that 296 that I'm going to be getting on April 3rd or 4th from Altria. So altogether, we're going to have about $300 and say $20-ish, about $320 to be putting into stocks. And I'm going to be putting that into T. Rowe Price. So I should be getting around 3 new shares. So it should be about 103, depending on price fluctuation, of course, when I get those dividends. So that's just going to keep the snowball effect going, guys. That's really what this is about. I'm putting my money in companies that I think will be able to pay a growing dividend for decades. I don't have any doubt in my mind that T. Rowe Price is could be a potential AbbVie Part 2, right? So that's what I want to do. I want to find quality companies at discounted prices, put a bunch of money in, or as much as I can, into those positions, and just let those ride out, let those compound, let those grow, let those make me wealthy, right? That's the name of the game. So with that, guys, we're going to take a look at the watch list. I do have Alliant Energy on there because I'm going to do a utilities video right after I record this one. So right now, I want Visa, which is at 220, which if you guys have watched a couple videos, you know that that's a little too high for me. I don't want to be buying it at 220. I want to be buying it around that 190 mark. So I do want to have, like right now, we have about $30 of upside, which is great, but I would rather have a higher upside. This is just like T. Rowe Price. So I have a price that I want to buy it at, which for T. Rowe was about 120-ish. So I bought it at like 122. Visa, I would buy at 190. But once I bought it at that price, I would not buy it any higher than that, but I would buy it lower because I want a higher yield, especially on something like Visa that pays such a small dividend. I want it at the lowest price possible, especially on these low yielding but high growth plays like Visa. So that's really where the income is buying that share count, buying a huge share count of like, say, 100, 200, 300 shares on something like Visa and just letting that compound, right? So it's setting money there at the best possible price I think I'm going to get it, and that price is going to lock in a great return for me. So right now, if I bought shares of Visa, I'd still be getting a $30 upside, a great growing dividend, a phenomenal company. It's not a bad price, but I want it to, instead of a $30 upside, I want it to be 90, 100, 10, like another $30 to that. So like a $70 or $80 upside on that, right? So that's where my thought process comes in, is like, I want to buy this at a lower price so I can just compound better, because it has further to grow at that point. So like I said, right around that 190 to 200 price is where I would be piling money into Visa. So I wouldn't touch it with a 10-foot pole right now, but I am willing to be patient for a quality company. And then next, of course, we've got Berkshire Hathaway. I want to buy this 300 or below. 302, I'm okay to initiate a position, wouldn't bother me, but I don't have the cash flow currently. So, guys, overall, there's been a lot of red in the market, which is totally fine. That's what we look forward to as dividend growth investors. Like I said, it's the same with Visa. It's the same with Apple. Different stocks get affected at different times. So, when the financial sector is getting slammed, that doesn't necessarily mean that the utilities are getting slammed, or, the consumer staples. There will be a time where financials might be up and consumer staples might be down. Like, that's the beauty of the stock market. That's why they tell you to be diversified, because if your money right now was all in T. Rowe Price, you'd be looking like a really bad investor, right? But you're not necessarily a bad investor. It's just the stock is down, right? So that's another important lesson too. Don't let fluctuation let you determine that you yourself are a bad investor. I'm not a bad investor because I'm down on zero price. I have a great price on the company, right? I still have a $30 upside, which is that's like $3,000 right now of upside. So anything I buy now is just adding to that upside. So don't get down when you see red days. That's all a part of the game. That's a part of the plan. It's opportunity. Okay? So just look at it as opportunities. With that being said, guys, thank you so much for watching, and I'll see you guys in the next upload. Take care, guys.